Okay, let's stick with base metals. The TSX index of base metal stocks is up something like 26% this year. There's lots of interest in copper and nickel as ways to play an electricity-focused world economy. The head of Vale's base metals unit is aiming to get the operation ready for a potential initial public offering by 2027. We're joined by Shaun Usmar. Thanks very much indeed. Great to see you again.
It's good to see you too.
I know nothing is certain. You might just do a spin-off to shareholders. It's been a work in progress, but an IPO is still possible as well.
I joined because of that possibility. I think it's an underappreciated, unique platform, which has huge potential that the market cannot see. So if we can get the Canadian base, the growth potential in Brazil and elsewhere on this sort of vertically integrated global platform in a moment of critical minerals need up to speed, for the market to see that, we then have the opportunity to capture the cost of capital arbitrage between a diversified like Vale and indeed what a pure play would be. So I think it's an interesting possibility. It'll be up to our shareholders, and I'm speeding along to get us to that point.
I think we have a chart showing that Vale's profit essentially comes from iron ore.
Yes.
Right now, nickel and copper are really not a very big contributor. No. So obviously your thesis would partly be there. It's just buried within Vale. People can't really see the value.
When I first looked at this, I looked at it, Sudbury needs no introduction. It's been around since 1886. I think it's the original critical minerals Canadian story, actually. We're in Voisey's Bay, we've got Thompson, we've got Long Harbour. We employ 7,200 Canadians. Mm-hmm. We gave, I think it was 95% of all the high purity nickel in World War II. So this has been a large part of this thematic.
And we have a map. It's a little hard to make out, but of course, sorry to interrupt you there. No. Sudbury in Ontario, Voisey's Bay in Labrador, and still the operation in Manitoba. Carry on, Shaun.
So the idea is at a time where the Chinese are dominating supply and the world actually needs us, starting to pay attention to its supply chains. We do 60% of the high purity nickel into aerospace and defense. Last year, exactly, and we have for over 100 years done this reliably. So it's underappreciated. So if we can actually get this into the lower half of the cost curve, all you need is a change in the cycle, because at least half the cost curve is underwater in nickel. And we're polymetallic, so in places like Sudbury, only half the revenue comes from nickel. We're investing, there's huge growth potential. And then to your point, it's to really make it visible and relevant. In copper, we are at about 350,000 tons per annum. We're looking to at least double that, mostly in Brazil, over the next decade. And it's really low capital intensity, and it's not at altitude. So the idea is to do this, operate reliably, and we're doing that. It's been a remarkable change.
Because you get copper out of the giant mine at Salobo.
We have our cornerstone is Salobo, and we just recently hit some new records on that mine. It's multiple decades and still open in every direction. But we have this sort of regional opportunity in a region that we've been active for decades. So our next cab off the rank is a project called Bacaba, less than $5,000 a ton in terms of capital intensity. We'll bring that on around 2028. And then we've got a series of these sort of hub and spoke type opportunities, which have much lower capital intensity and risk than a massive greenfield. And as you know, copper's had a history of stubbing its toe every time it brings on new supply. I think this year is a case in point, about 6% below what the market was expecting at the beginning with some of the disappointments. So it's a unique opportunity.
It's interesting you mentioned altitude, because some of these projects in Chile have had problems. I don't know if it's all altitude, but it can be a tricky place engineering-wise. It's such an achievement, actually, producing copper up in the Andes.
Yeah, people are amazing. We do stuff up in the subarctic, obviously, at Voisey's. But you look at Para, we just had COP30 now. And, we're in the heart of the Amazon. We protect 2 million hectares of rainforest as part of our commitments to the region. But these to have low altitude infrastructure, a dedicated workforce, and all that provision is a huge advantage.
So you've had such a career. You're South African originally, but you were a CFO of Barrick at one time. You worked at Xstrata when they swallowed Falconbridge, I believe, and then it was taken over by Glencore. And then you left to form a gold royalty company, and you got wooed back by Vale.
Yeah, I built Triple Flag from an idea in 2016 to its $9 billion market cap business with capital from Elliott. I loved it. And it was the chance to build something at a time where I felt the market it was underserved, the mining sector, outside of large diversifieds. They didn't have the capital. And we IPO'd back in the TSX in 2021. bizarrely, at that time, it was the largest TSX mining-related IPO in 8 years. So
Triple flag was.
Yes, triple flag. And so I just think I'm proud of the team. It's gone on so well. But this moment, I think, with the critical minerals thematic and the chance to get this business to perform and then to potentially IPO and unlock this value and maybe create another North American champion, I think is a unique opportunity.
What has held back the base metals operation over the years? Because Wells Fargo say you've turned it around, or you're succeeding in turning it around. But what has been the problem?
Look, I think the first thing you'd sort of alluded to, when you look at the current performance with Vale, if you're sitting in Rio and you're allocating capital at a time where obviously base metals have very different characteristics. The one is, perhaps the premier iron ore mines in the world. They're incredible with logistics and large open pit mining operations, and they're really exceptional at it. But the marginal dollar most times is going to go into those operations. And when you think about this business, been around for centuries, mostly underground rather than open pit, mills, concentrators, smelters, refineries, all the things that the Canadian government and others are talking about, we're doing. And we're doing it from Indonesia, Japan, Wales, all over Canada and Brazil. So the real thing here is focus. And that was the idea that birthed the carve-out. So they could see it had this potential. Mark Cutifani was my chairman. He'd sort of done an asset review and said, look, if you can deliver this, it's perhaps $30 or $40 billion. We had a research report just a week that came out identifying at least $30 billion of value. And as you know, the Saudis invested a couple of years ago, $2.5 billion for 10%.
In Vale Base Metals.
In Vale Base Metals specifically. So we know the value's there and the work we're doing to sort of get the operations to reliably produce, to bring that focus, and then to really unlock the things that we can control in that endowment is it's exciting.
So you have in Sudbury, just remind us, you refine and you have a smelter.
Yeah, we actually had Mr. Hodgson last week visiting our Copper Cliff refinery. Yeah, that's right. And we have 5 mines there. We're actually investing in bringing back some of that capacity so that Sudbury and Canadian copper and nickel specifically can actually compete on a global scale. You've seen Australia go out of business. And so part of this... Why did they... There's massive oversupply coming out of Indonesia. So I'll give you an example. Nickel, copper is more of a supply story that continues to underperform where the sector struggles.
Sure.
So GDP growth, roughly 2% or so growth year on year is what the demand growth story is. We have a fundamental growth story in nickel of this year on year. I think it grew just about 7%.
For batteries? Sorry.
Well, it's stainless steel primarily and batteries. And, but if you look at it, we, just in this last period, 7% demand growth year on year, 15% supply growth coming out of Indonesia. So more than half the cost curve underwater. So our focus is really to make sure that this endowment that we have in Canada is robust, doesn't go the way of a lot of the Australian and New Caledonian operations, can be globally competitive in the lower half and the cost curve, and then use that because the cycle will turn. And at that point, we'll take it forward. Now, in Sudbury's case, we, for the first time since 2016 this year, we'll do over 5 million tons through the mill and concentrator. As you appreciate, 5 mines feeding a mill and concentrator, there's fixed costs in the downstream. And the only way to make it cost competitive is to make sure that you can mine effectively, have a contribution margin that will flow through into your mills and concentrator to make it globally competitive. We're investing in that. Our teams are coming to the table. We've dramatically lowered overhead. We're reinvigorating these guys, and it's exciting.
We've only a few seconds. I got to ask you a question that I know you won't answer, but there's been speculation that Vale might step in as an interloper in the tech takeover. Of course, you've looked at it. You'd be crazy not to, but can you give us any thoughts there?
Look, I've ignored a few journalist calls on this, as you'd imagine.
Yes.
The only thing I say is, the real focus for us, that comes back to your IPO point, is fundamentally the market doesn't know what we have. So the biggest disservice I could do to Vale and to Manara, our shareholders, is to not be able to actually unlock that value through this pipeline. And then we'll go and play when we got the cost of capital opportunity. Right now, I've got to deliver organically.
Shaun, thanks very much indeed.
Thank you.
Shaun Usmar, he heads up Vale Base Metals.